Jonah, how are you doing today, my friend? Did you have a good start to the week?
Yeah, doing good. I was up 2.1% today and I think I'm up 189 for the 189% for the year now.
Nice. How are you feeling about the overall markets, just generally speaking? You feeling like they're trying to put in a bottom here? You feel like we got another wave down to go? Where's your head at?
I really don't know, to be honest. I feel like they're with geopolitical where it is, that could kind of take the markets off course in the short term. We get PPI tomorrow, CPI on Wednesday, Jerome Powell speaking at Jackson Hole in 2 weeks. I mean, those are all potential landmines, if you want to call it that.
Right.
So I don't really know what the indexes are going to do in the next 2 weeks, 2 months. I mean, I'm still more focused on individual names. And for the most part, all of my companies had really strong Q2 earnings. Pretty happy about the last couple of weeks of earnings for me personally. I think overall it was a pretty good earnings season. I own a couple of the mega cap tech stocks, which obviously have a lot of influence on the markets. I own Meta, I own Nvidia. They both had very good, well, actually, Nvidia reports in 2 weeks.
Right. Right.
My only blemish this earnings season has been SMCI. So I was buying SMCI last year in the high 100s, low 200s. I sold most of my position up in the 900,000. I think I sold about 90% of my shares at an average exit price of 900. And then I've started accumulating those shares back in the past couple of weeks
Nice.
when SMCI sold off on earnings. They said margins are going to get a little squeezed, but don't worry, revenues are still going to grow 80 to 100%, and we're probably being conservative. And the stock dropped 20%, like huge overreaction. So
Right.
I was adding from, I don't know, 530 all the way down to 480 last week, which was kind of painful, but I think SMCI has seen a bottom, and I think we're going to grind higher into Nvidia earnings. So that's what I hope, but we'll see how it plays out.
Nice. Right on. Yeah, we'll definitely be watching it. Let's get into it, Jonah. We wanted to take some time today and really drill down on your TrendSpider scanners. For everybody that's in the audience who's not yet aware, Jonah has the absolute best deal that you could possibly get on TrendSpider right now. You can save up to 65% off your first year with us here at TrendSpider. But that's not all you get. He's also been super kind to share with anybody who signs up several scans that he's utilizing every single day to find key setups for his strategy. Now, Jonah, I know that quite a few of the names that are in your current portfolio were actually found using one of those scans, the Power Gap scan, the recent Power Gap scan. So I wanted to, before we even talk about maybe the scan itself, I kind of wanted to pick your brain briefly on Power Gaps. What are they? Why are they important to you? Maybe for anybody in the audience who's not familiar with what a Power Gap is, talk us through why they matter, why you're constantly looking for them.
So there's probably two types of power gaps, and I'm sure everyone has their own definition. So to me, there's a regular old power gap where a stock gaps up the next day on some newsworthy event. And then there's the power earnings gaps, which are obviously power gaps that happen during earnings season. So they're directly related to earnings. I mean, I think all power gaps, and our scanner doesn't separate the two. We just have power gaps because I want to be able to find those gap ups throughout the year where there's something, obviously, there's a big catalyst that is in play, and investors are jumping over each other to try to accumulate shares in that particular stock for whatever the reason might be. Maybe it could be something as simple as an acquisition rumor. They could pre-announce earnings. It could be a management change, a new product launch, a lot of different things. So power gaps, if you're swing trading, power gaps can be pretty powerful when you find them. Now we're coming out of earnings season, so the scanner that I'm most focused on this week and probably next week will be the power gap scanner. So that looks back over 10 days, I believe, and then we can tweak that if we need to.
Yeah, that's correct. It contains a few key criteria that you're always looking for: some minimum stuff, market cap over $1 billion, price above $5, minimum volume above 500,000 shares per day, that sort of thing. And then really the power gap piece is kind of what we're seeing here on this CWAN chart, where you have the low of a day is greater than the high of the previous day. Usually these occur on quite a bit of volume. You're oftentimes looking for maybe even like 100% want more volume than usual. At the very least, you're looking for above average volume. And that's kind of really the basics here. We just have that volume criteria defined, 100% above average, and then the big gap up. I guess maybe like getting in a little bit more into the details of the specific names that you're after. This thing has found quite a few setups, but not every single setup for you is deemed as good as other setups. Some of them, like, yeah, maybe you can kind of talk us through a handful of your favorite setups, kind of why they're your favorite ones.
It depends what the rest of the chart looks like. If it's still below all of the moving averages, I'm probably not interested. If it's a name I've never heard of before, I'm probably not interested. If it's biotech, I may be interested, but if I do biotech swing trades, they're typically smaller positions. So my normal starting size position for swing trades in my trading portfolio. So I run two portfolios. I have my investment portfolio, which is core holdings, non-core holdings, swing trades, hedges. That's the one that's up 189% year to date. And then I have my separate trading portfolio, which is only swing trades, which I'm actually going to discontinue and fold into my other portfolio. Because I do think there's value in adding swing trades to your strategy. I just don't want a strategy that is 100% swing trades, because it does get somewhat time consuming every morning to go through all these scans. I mean, you do have to do the work. I mean, the setups are there, but you have to do the work to find them. Not all power gap setups are ones that I'm going to take. One that I did take today was CWAN. So that gapped up last week or 2 weeks ago on earnings. Monster gap up. I mean, I wish I had seen it sooner, and I wish I had bought it when it broke through 21.89, which was the high from November. I missed that breakout. So I bought it today as it pulled back and bounced just above that November high, finding support at the 10-day EMA.
Got it. It was at the 10. Okay.
So bounced off the 10 today, just above November support. So I started a position on the bounce off the 10-day with my stop loss just below the November high.
Yeah, I mean, this is a perfect breakout retest too. This is actually interestingly coming up in another scanner that we're going to go over.
Yeah, so if we were looking at the breakout retest scanner, I'm guessing it would probably pop up in there too.
It does. Yeah, definitely. Is there anything on the fundamental side that excites you about this company, or was this sheerly just a technical?
I don't remember the exact numbers off the top of my head, but I remember when the numbers come through. So I subscribe to a bunch of services, so I see every single earnings alert come through in my inbox, and I kind of take mental notes of which ones look pretty good. And Clearwater was in that category that looked pretty good. And I've traded it before, so I've looked at the fundamentals before. I just don't remember off the top of my head what they looked like for Q2 specifically.
Yeah, actually, looking at them right now, they're looking pretty darn good. This thing's been increasing revenues for quarter over quarter for like 12, 15 months in a row, something like that.
Nice thing about power gaps is it kind of does the fundamental analysis for you.
Right.
Gapping up that much, the numbers must look pretty good and significantly better than whatever the estimates were.
How do you think about managing this position? We've talked a bit about it offline, but maybe you can talk through what gets you out of this position. What keeps you in it? What visually, what mentally are you looking for?
I mean, I'll keep my stop loss where it is until we push through that V. So if you throw a VWAP, an anchored VWAP on that recent high from a couple weeks ago, the next day candle
from this guy right here,
the top one
right here.
Yeah. So if we push through that VWAP, then I'll move my stop loss up probably to below either the 6-day or the 8-day. And then at some point I'll move it up below the VWAP, because if we push through the VWAP and can't stay above it, then I might want to get out. We'll see. So, I mean, I'm not in a big rush to get in and out of these positions. I'll try to stay in as long as it's working. So, I mean, if CWAN wants to just bounce along here, bounce along those November highs for the next 2 or 3 weeks, I mean, I'll just stay in the position. I don't mind waiting for it to do something. And if you look at these one of my scanners is that 52-week breakout retest. I mean, some of those stocks broke out 2-3 weeks ago, pulled back, retested the prior high, and they've literally bounced along that prior high for the last 2 or 3 weeks. And if I owned them, I'd be patient. I'm not in a rush.
Is there anything in particular that you would have to see that would just be like a clear, I got to get out of this thing?
Yeah, if it doesn't hold that November high. That's it.
That's it.
Yeah, that's it.
So maybe just like a quick alert or something like that, breakthrough alert,
Yeah, I mean,
low time frame.
I'd have a stop loss set on it.
Got it. Okay. So yeah, so you're preset already. What
Stop
about some
loss.
of these other ones? OMCL was another one that's coming up here in this scan that's
So
looking awful good.
yeah, got into that one today. So big gap up on earnings, I assume. But to be honest, I'm not even sure why it gapped up. I just know that
Earnings.
it was earnings. Okay, so
Yep.
monster gap up, pushed through that prior high from December of 2023.
Yep.
So I didn't buy the gap up, wish I had, didn't buy the breakout, but now we're kind of consolidating here at those December highs. So I got in today when we pushed through 39.99, which was the high on December 22nd of 2023. So I'll stay in this one as long as we stay above. So you can't see my charts. So I also have a horizontal line at the opening high on December 15th. So if we can't stay above that 39.51, then I would get out of my OMCL position.
Got it. Okay. So this one you're being pretty cautious on then.
Yeah. Oh yeah. Yeah. And this is a smaller position. So I don't know enough about the company to have a full 6% position. So this is a 4.5% position.
Cool. Got it. Cool. And then what about thinking about re-entering it? Is there, you break down below these highs and then what? Is it just off the table for you? Or are you looking for like a regain of those highs? You looking for
I mean, if I got stopped out under 39.51, so right now my stop loss is at 38.90. If I got stopped out, then it would be dead to me until we push back through 39.99.
Got it. Okay. Cool. Yeah, it's a really good looking one. There were some other ones too. Zeta, I believe, was one that was coming up.
I'm in Zeta right now. I mean, so this is one I've been looking at for my investment portfolio as well. So I have a rough idea of the fundamentals and the valuation. It's still a little bit expensive for my investment portfolio, but still very strong fundamentals, reasonable valuation. The stock continues to gap up on earnings. You can go back to see the gap up in May.
Yep.
It was a gap up in April, although I'm guessing April was not earnings, but the May
was not.
So this one is just great looking chart. So I got in on 8.6 at 22.17. So I got in. So
kind of like the regain of the high.
Yeah,
somewhere in there.
what happened? So it gapped up, and then we got the Monday morning massacre, right, a week ago. And once it pushed back through the moving averages or came back, it looks like it bounced off the 10-day. So it probably pushed through and then maybe came back, retested the 10-day. That's when I got in. I don't have my original stop loss, but it was definitely below that 10-day. So at this point, I'll just ride the 10-day higher. So right now, my stop loss on Zeta is 22.30. So as long as it stays above the 10-day during normal market hours, I don't care what it does pre-market or after hours. But as long as it stays above the 10-day, I'll stay in that swing trade and I'll just ride it higher.
Yeah, this section of the chart, creepy, where they gap up, but then they kind of retrace the whole thing and some. Right? I know that we've talked about this before, and you're kind of always looking for that gap to really hold. And here they clearly didn't do it. They bought it up every day in those 3 days, but they just weren't able to hold it. So that's why you kind of sat on your hands.
Last Monday was sort of an anomaly. I mean, a lot of charts pretty ugly. I mean, look at Palantir. I think Palantir was down 15% at the lows last Monday. And then after it reported earnings either later that day or the next day, I think it 35% in a matter of 24 hours. So
crazy.
I mean, that's just insane. Yeah.
That is insane. Our founder is a big PLTR guy. So I'm sure I know that he was happy about that. Talk us through the idea here. Gap up on 2 earnings ago, gap down previous earnings. Yeah, on Palantir.
Yeah, so I'm in Palantir as well. So I have a swing trade in Palantir. I got in on 8.6 at 25.59. So I bought it after earnings. I don't have a very good memory of exactly when or why I got into these positions, but my guess is so gapped up on
20 or on the 6th rather. Sorry.
Yeah, so Monday. Okay, so last Monday. Looks like it tested the 200-day at the lows on the massacre, bounced off the lows, closed around 24, gapped up the next day, back, and it looks like it kind of retested, bounced just above the 50-day. I'm guessing that's where I got in. So entry was 25.59. Yeah, I bought
Damn near the low, huh?
Grabbed the lows almost perfectly. And then I've kept my stop loss, I don't know, 2-3% below. So right now, but I've moved my stop loss up in the past couple of days. So right now, stop loss is at $29. So if we can't hold the close on August 8th, that's where I would want to get out and not have to ride it write it down to the 5-day. And then if I got stopped out there, I would probably only re-entry. I don't know if we took out like 29.85, which was the high back on July 18th. I mean, I like Palantir. So this is where like I'm trying to do more swing trades on stocks that I know better, where I have a better feeling for the fundamentals and the valuation, which will let me be a little bit more patient, I think, on some of these. When I'm trading stocks that I really don't know anything about, I don't know, just makes me a little bit more nervous. Like Palantir, for instance, great company, good fundamentals, not great, they're good. Valuation, not very reasonable. I mean, Palantir is trading at 50 times next year's EBITDA. I mean, it's a pretty rich multiple in valuation. So if I had another stock that with a similar, like let's just say we had two stocks with the exact same setup, and Palantir is trading at 50 times next year's EBITDA, and this other stock is trading at 30 times, I'd rather take the stock trading at 30 times because you're more likely to get some multiple expansion out.
And that makes a lot of sense. I mean, knowing the deeper reality of a company is always a little bit more comfortable.
Probably, I mean, in my investment portfolio, I have 15 or 16 core holdings. I have another 15 or 20, what I call non-core or swing trades. So that's, let's just say it's like 40, 45 names in total. I'd probably follow another 35, 40 on top of that. So maybe 80 to 100 stocks is how many names I really follow on a consistent basis and actually take a deeper look at their earnings. Those are the stocks that I prefer to trade if I can. Now, I mean, if none of them have good setups, then I kind of have to go outside of that, that list and try to find some names I can trade. But right now, like this is my favorite time of the year to trade stocks, to do swing trade, because we're coming out of earnings season. Most of my companies have reported. Most of them reported great numbers. So in my trading portfolio, those are the names that I want to try to get into with the right setup. So in the past week, I've started swing trading positions in AppLovin, Shift4, Transmedics, Aspen. I already own all of them in my investment portfolio. They're my largest positions, but now I can add them to my swing trading portfolio because they have the technicals, the fundamentals, and the great setup. If you look at like Aspen, for instance.
Yeah, we're there right now.
Oh, okay. Perfect. So they reported earnings, I want to say last Wednesday. Stock was up like 32% at the open on Thursday morning, and then opened. It got rejected at the VWAP from the highs in early June. So like a perfect rejection at that VWAP.
Perfect rejection, yep.
And then it reversed, and I got into Aspen as a swing trade as it pulled back and started to bounce off some of the short-term moving averages. So right now I'm in Aspen with a swing trade. Stop loss right now is 20.89.
So those lows essentially, or the 10-day even.
Yeah, just below,
just above the 10-day,
just below the low from last Thursday.
Right. Yeah, this is I mean, it's crazy. So many of these setups coming up direct in this power gap scan. Go ahead.
So here's a good example. Like if I didn't know anything about Aspen, I probably wouldn't have the guts to buy this stock on that reversal. I would think something was wrong. Like, why is everyone now selling this stock? But because I know the company so well, I look at this as an opportunity to add some exposure as a swing trade. Like if I didn't know this stock well enough, I probably would have only started a position if it pushed through those VWAPs from the June highs. But because I know the story, the fundamentals, the valuation, like that reversal to me was just a huge buying opportunity, and I wanted to get it into my trading portfolio.
Nice. There was one other, you mentioned 4. That one's coming up in this scan too, I believe. Yeah, here it is.
Shift4, very good earnings report. Stock gapped up 10%. So I started a position in my trading portfolio. I already have a huge position in my investment portfolio. Started a position in my trading portfolio when it pushed through the 200-day. So I love breakouts. I love breakouts and retests. I love stocks that push through VWAPs from their 52-week highs. I like gap ups, power gap ups. I also like stocks when they reclaim like a really important moving average. The 200-day is certainly one of them. So if I know a stock, I like the fundamentals, I like the valuation, and it's pushing through the 200-day, to me, that's just a great sort of risk reward where I can start a position on that push through the 200-day, tight stop loss just below the 200-day. So if it reverses, I'm out with minimal damage done. So in this case, I got into 4 as a push through the 200-day.
Yeah, it kind of did everything, right? Big power gap through the 52-week high, a VWAP through the 200 on volume, kind of everything that you just described that you want to see.
Another one that I'm looking at that it's sort of in that same situation, just hasn't quite hit my spot yet, is Shopify.
Ooh, let's take a look.
So Shopify gapped up on earnings, but it got rejected today at the 200. So that's the level I'm watching. If it can get through the 200, but it also has to get through the highs from July of last year. So if you scroll back, so the high from last July is right around $71. So it's got to get through there as well.
Gotcha. What is it about that high that's so important to you?
So it just, if you look back at January 4th, Shopify bounced off that high. So I just think it's an important level.
Got it. It's almost like a potential head and shoulders thing too, if it ends up failing, huh?
Like it just doesn't seem like it's worth taking the risk on the position until it can get through the 200-day and get through the highs from last July. And then maybe it could, it could rip from there. So
cool. These are all great looks, man. I'm really stoked that this scanner is helping you out so much finding these things.
Other stocks that I'm looking at, like similar setups, not quite as obvious as Shopify and but Akamai, AKAM, gapped up on earnings, did close above the VWAP from the February high and the 200 EMA, but reversed today. So now it's below those two. I'm not in this one, but if AKAM can push back through the VWAP and the 200-day EMA, then I'll look to get into it.
Nice.
And
alert on that bad boy.
So TWLO showing up on a bunch of scanners as well. Big move on earnings, has pulled back. So looks kind of weak right now. But if it can get above 62.50, that would put it above the 200-day and the VWAP from the December highs.
Nice. Just creating some alerts on these guys so that I know that this is going to happen, so that I know when it happens.
I mean, so like some of these tech stocks like TWLO have been dead money for the last few years.
Right.
Doesn't mean they're dead forever. I mean,
right.
Maybe things have finally based long enough and maybe the valuations are starting to make sense on some of them. Now, like there's no way I would add TWLO to my investment portfolio, but this is the kind of stock that I would gladly do a swing trade in if the technical's set up correctly.
Nice. So let's talk a little bit about the next scan. We've spent quite a bit of time here on the power gaps, and obviously this is a super powerful setup that you're looking for all the time. You had mentioned earlier that you're also looking for breakout retests. We've got one of those pre-built for you too.
There's a lot of gap ups. Like I have a list of over 50 stocks that have all gapped up.
Oh yeah, a ton of them.
Like you definitely want a scanner that's looking for gap up because there's a lot out there. I mean, KVYO, INSP, HWM, FTNT, EXEL, EXAS. Like there's a lot of really good gap ups in the past 2 weeks. And now those stocks are starting to consolidate. Moving averages are catching up. That's typically where I want to try to take my swing.
Yeah. So even though we haven't even like talked about half of these, some of these might end up being some of these might show up on your list here in the next day or two or three or four.
Oh, for sure.
Yeah.
And a lot of them are gapping up just above that 52-week high. So now I want to see them come back and retest the 52-week high, consolidate there for a few days, and then I can start my position.
Yeah, so let's talk about that then. This is another scanner that you're going to get if you sign up using Jonah's special discount. Is the I'm sorry, this is the wrong one. I meant to pick this one.
Nope, this one. Breakout retest.
Yeah, the 52-week high breakout retest. This one's a little bit more. This one has a little bit more stuff built into it as far as what it's looking for. It still has all of your key criteria here, but that key thing of we recently broke out to a new 52-week high, and now we're consolidating above that 52-week high. We haven't retraced below it. We're holding it, but we're just kind of hanging out there. So like almost like a cup and handle pattern, almost a little flag pattern. The kind of different stocks look different ways, but maybe we can talk through a couple of these key setups as well. Trying to think. CWAN,
one that might be actionable tomorrow is AMH. So American Homes. The previous 52-week high was August of last year. So it broke through last week, broke through those highs from last summer, and then now it's retesting. So today it bounced off of that high from last summer and held.
Yep.
So I would consider starting a position tomorrow as long as we open up above 37.97, depending on where we open.
Got it. And is that all it takes for you, is just like kind of one test and hold for you to say, yeah, I'm ready?
Well, I mean, if you look at it closely, it was it first pushed through on August 2nd, and then looks like it kind of gapped down the next day, and then so it's been consolidating around there for the last week or so.
It's super clean though. Super
Yeah.
clean.
Oh, for sure.
That's a pretty one, man.
So I mean, I would love to get in around maybe under 38.20 with a stop loss around 37.70 ballpark.
Right. Super tight.
So one that I almost took today, I'm glad I didn't. Although might be in play for tomorrow, LTH Lifetime. So this is the large gym chain, Lifetime Fitness.
Yep.
So you had previous high July of last year. This massive, it's not really a cup and handle. Right now it's just a cup.
Yep.
And then broke back. So August 1st, pushed through those previous highs, fell back below the next day, stayed underneath for a couple days, now back above. Today it gapped down on a offering. I forget if it was a stock offering or a debt offering, but the market didn't like it. Stock was down 6.5%. So I'm glad I wasn't in it already. But now it looks pretty interesting. Now that the offering is out of the way, if this stock can push back through 22.40, I'm interested.
Back into the gap, huh?
Yeah, I mean, not necessarily. Just has to get back above the highs from last summer.
Got it. And so you're using those as your kind of on-off switch. Above them, we're good. Below them, we're not interested.
That's my line in the sand. So if it's above, maybe 22.35. If it's above that, I'm in it. If it's below that, I'm out.
Nice. Yeah. I mean, killer look for sure. It's so nice to be able to just see all this stuff. UNH was another one that I had noticed.
I was just going to say, yep. UNH.
Darn good.
Yep. So let's see. Previous high was November of 2023. Pushed through there on July 17th. Then came back a few days later and bounced off of that previous high. And now it's sort of, I mean, I guess it's still consolidating. Today it bounced off the 20 EMA. So I'm not really sure where I would buy it. So these are I mean, this chart looks great. I just don't know if this is the kind of stock I want to trade, like tie up my capital with a name like this that really doesn't have that much juice to it. So, but the chart does look good.
Yeah. When you say it doesn't have much juice to it, what do you mean?
I mean, this is kind of how I feel with utilities and banks. However, utilities are like the best performing sector this year. So, I mean, sometimes you look at these sectors or some of these stocks as kind of too big, too boring, not enough juice, and yet they end up being some of the best performers in the market, over short periods of time. And UNH might be one of them. I mean, there's a bunch of other names that show up in my scans. REITs, like a lot of the regional banks broke out a couple weeks ago when CPI came in cooler. The 10-year crashed, regional banks ripped higher, and then over the past 2 weeks, a lot of them have started to come back and retest those breakout spots. So if the 52-week high breakout retest has a lot of banks on it, a lot of banks, a lot of REITs, a lot of utilities. So the setups do look pretty interesting for most of them. I just historically have never really traded those sectors actively, but maybe I should.
Yeah, maybe. What does it suggest to you about kind of where money is? I mean, because think about it like this, or this is another way to think about this scan, right? The market sold off nasty for the past 20 sessions, and these names are breaking out to new 52-week highs and retesting those highs. These names are completely bucking the trend of the overall market. So like go ahead.
I think that makes sense because I think UNH is sort of seen as a defensive stock.
Sure.
So certainly when the markets are selling off, you would expect to see strength in a name like this. And
right.
I think healthcare in general has held up pretty well the last couple of weeks, partly because my largest position in my investment portfolio is still TransMedics. The fundamentals are phenomenal, as good as any stock out there. The valuation is still very reasonable, and it's in healthcare. It's med tech. And I think if we do have a recession, healthcare, med tech, are two sectors that will hold up very well. They are mostly recession proof.
Yeah, because everybody needs them, right?
Yeah, if you need a heart transplant, like it doesn't matter what inflation's doing.
Right, you're getting it. Yeah, so that's what's kind of so nice about this particular scan is like it's not just serving the purpose of finding you the particular setup that you're looking for. It's also kind of serving you the purpose of just finding where the strength is even in a down market.
Yeah, I mean, so every morning I go to Bar Chart, it's a website, and I can see the heat map of all these sectors over the last 1 day, 5 day, 10 day, 1 month, etc. And very often these scans are matching up with those heat maps. If I go to the heat map and I see that the best performing sectors in the last 5 days are utilities, regional banks, and consumer staples, when I go look at these scans for 52-week high breakout and retest, it's probably going to be a lot of those sectors in there.
Right. Yeah, it's a good looks. There's somebody actually in chat asking about the criteria for this scan. So it's kind of a little bit more intense than the gap up one, but essentially just looking for a basic breakout out of a range high, a 52-week range high. And then there's another criterion here that kind of the purpose of it is to give that previous 52-week range high kind of more of a flat top look as opposed to just, if you're in a stock or if a stock is just increasing day after day after day and consistently making new 52-week highs, it kind of defeats the purpose of like a big breakout out of a important 52-week high that occurred sometime in the past. Because that was key, right, Jonah? Like we wanted to find names that hadn't made a new 52-week high in some time. It wasn't about every single day making new 52-week
Right.
highs. It was about we want to look for like 52-week highs didn't occur or haven't occurred since like August of last year or November of last year or whatever it was. So that's kind of the key piece here. And then as far as the retest is concerned, we use all of your key moving averages 5, 6, 10, and that 52-week high as price is coming within range of any of those things, because sometimes those moving averages have made it above the previous 52-week high, and we're just looking for some sort of pullback. So those
Like
are
if you
kind of the
look
key
at
pieces there.
look at GoDaddy. I mean, it's one of the best
Oh,
charts out
monster,
there.
monster.
It's ridiculous, but it's like I don't know how to get into that. Like
Exactly.
it was going up like almost every single day for 6, 7, 8 months. I just felt like I didn't have a good entry point. Now, I mean, if I look at the chart right now, it did bounce off the 50-day back in March, bounced off again in May, and then bounced off again in August. So that's probably where I could have had my entry.
Right.
But
And that's also a good level to be risk off on, right? Like when the time comes that price manages to actually break down below that 50-day, it's probably a big indication of, hey, something maybe fundamentally has changed with this company, or at least investors' opinions about it, right? Just because it's
right.
acted as such good support for so long.
So that brings up a good point. I mean, that is kind of like the last sort of setup that I look for. It's the stocks that have historically bounced off a specific moving average. Like in this case, GoDaddy off the 50-day. So the next time I see GoDaddy pull back to the 50-day, I might take a swing on it, knowing that that's where it historically bounces. But if it doesn't hold, I'm out. Like I'm out real fast, because if it usually bounces off the 50 and doesn't bounce this time, then I don't want to be anywhere near that stock. But there's other stocks that look like absolute crap on the charts, but they are pulling back to a very, very important support level. So one stock that I got into last week is Celsius.
Ah,
So
he's back.
most people know that I was in Celsius very early, May of 2020 in the threes, and I exited my entire position a few months ago. Average exit price was in the high 80s, and I'm back in Celsius. So if you look at Celsius on the weekly chart, I got in last week when it bounced off of the 20-week SMA and off the November 21 high. So 200-week SMA
Oh,
and the November,
200 week.
yeah, 200, yep,
Bam, to a T.
yep. And then a bounce off the November 2021 highs. Nope, next one down. Yep. So that was like, I mean, the chart has looked like death for the last 3 months. It's pulled back, I think, 60% from those March or April highs. But if I'm ever going to take a swing on Celsius, like this is where it needs to hold. Now, if it can't hold the 200-day, the 200 week, or if it can't hold the November 2021 highs, I'm out. So I got in at 36.50. My stop loss is probably around 35 bucks. So if it can't hold 35, I'll get out. And then I could always re-enter it if it reclaims the 200-week or the November 2021 highs, but I do not want to own it below those levels.
Yeah, I mean, this is clearly a pivotal moment. You probably actually had back in May of 2023. We can look real quick. It probably had a power gap. Yeah. Big power gap up too. So just filled that power gap.
Yeah, I mean, like a lot of reasons why this should hold. And if this can't hold, then like once again, I don't want to be anywhere near this name.
Right. But clearly, like this is the spot.
I mean,
You're right.
what's
It's
crazy
so
is
obvious.
it's basically like it's the November 2021 highs and the August 2022 highs.
Mm-hmm.
August 2022 is when Pepsi announced they were investing 550 million for an 8.5% stake and taking over distribution. So like you are back to those levels when Pepsi announced that, or Celsius and Pepsi announced it. So it's given back all of those gains. Incredible.
Interesting. Do you ever spend any time looking at seasonality
For what, Celsius?
just for any of these names? Is this ever something that comes into your equation?
I mean, yeah, I mean, some stocks are more seasonal than others. I don't take it into account too much.
Yeah.
I mean, certainly with Celsius, there is some seasonality. Typically, their summer months are stronger than their winter months.
Yep.
Yeah.
Very, very clear. Very clear weakness coming into like September, but kind of would expect it to perform half decent here
And which
in August.
The story changed a little bit, obviously, with Pepsi, because Pepsi's pushing them into more hospitality, more food service, and now they're going international with Pepsi and Suntory. So Canada, Europe, Asia, Australia, etc. So we might see the seasonality less, less seasonality going forward because they're more international.
Interesting.
But I mean, this is still a small position. I mean, when this stock was ripping higher at its peak, or even the last 2 or 3 years, I mean, this was a 15, 20, 25% position for me at one point. Now it's down. Now it's a 1% position. So even though back in the stock, we're talking very small positions still. Now, that doesn't mean, I mean, I actually added to it today. Doesn't mean I won't, build it back up into a 2 or 3% position, but I have zero intentions of rebuilding this into a double-digit position again.
And that's reasonable. You've got a huge kind of like a lot of folks would call this kind of a broken chart, right?
Oh,
the way
it's
that
very
it's
broken.
Right. So you're just
Horrible.
you're thinking about this as like a kind of bounce opportunity, not a long-term sort of opportunity.
Yeah. I mean, this is a swing trade. The fundamentals are decent. The valuation's obviously been reset with a 60% pullback. I mean, for 3 years straight, Celsius was growing revenues in the triple digits, and now revenues are growing at 25%. So, I mean, the growth has really, really slowed down. The forward PE multiple has probably gone from 80 down to 35 or 40. So, I mean, this is a much different looking company at this valuation than it was just 3 or 4 months ago. So, I'm willing to own it here and see what happens.
Right on. Dope. Let's talk through this last scan here. This one didn't have as many results as the previous 2 scans, but there are a couple of good looks here. And I kind of want to talk about, obviously, if you do sign up for TrendSpider, you're going to get access to this one too. So I kind of want to talk through your thought process on how you go about trading these scenarios. This is the pre-breakout consolidation. So kind of the alternative, almost like the inverse of your 52-week high breakout retest. Instead of looking for the breakout and then buying the retest, we're looking for, or in this particular scan, you're looking for names consolidating just below a key high. So maybe you could talk us through kind of how you think about this, why this kind of setup is something that you're interested in.
So I think this one works really well in a good market, where you have buyers stepping in to buy these names on the breakouts, and you're not seeing reversals. And that's kind of what burned me a couple of weeks ago. A lot of these stocks are breaking out and then getting sold off. So they were reversing, and I was getting stopped out. So I'm just looking at some names right now because I didn't go through this one this morning just because I found so many names in my other scans, I didn't have to
Right.
go through this one.
Right.
So perfect example, DVA.
Cool.
So DVA, I
Yep.
mean, I guess you could say it's kind of been consolidating almost since March.
Yeah, definitely. Definitely. It's not as like obvious of the look that you were after with this, but it's still meeting all the criteria.
Right. So it's above the 50. I don't know the fundamentals off the top of my head. It's back above that March high, not yet back above the May high. So this one, it's been pretty choppy for the past 3 or 4 months. There was a gap up in May. There's a small chance I would buy this one above 145.50. Most likely I would wait for 147.50. And then above 147.50, it's just white space. So
Right. It's on.
once it gets through there, this thing could run up to 160, 170 pretty quickly.
How do you think about extensions into all-time highs? I mean, on the bigger time frame on the weekly here, this is looking like a pretty darn clean cup and handle, consolidating above previous all-time highs from back in August of 2021. Like on a bigger time frame, this is your breakout retest just on just a bigger scale.
Yeah, I mean, I didn't even notice that. I didn't realize. I don't spend a lot of time looking at weekly charts. I probably should. I mean, if I know that a stock was higher in the past, I'll try to make a point to look at it. But in the case of DVA, like I've never owned it before in my investment portfolio, so I just wouldn't know off the top of my head that it was at 136.62 back in August of 2021.
Right.
Yeah, I mean, in this case, this does look good on daily and weekly. Actually, probably looks better on weekly than daily.
It does. I'm almost thinking, and I'm not 100% certain, but I'm thinking this is like a dialysis. I think this is
Oh, it
healthcare,
is. Oh,
right?
definitely. Yeah. Yeah, kidney dialysis. So, I mean, I would love maybe tomorrow if it's down, get this one under 140 with a stop loss around 133, 134, just below the 2021 highs.
Yeah, really nice. Looks like seasonality into end of year, consistent gains through the end of the year too, across mean change and just return. Like seasonality kind of suggests that this thing could work over into the end of the year as well.
Trying to think another. So on this list,
View, big gap up.
which are using the NYSE. I was using the Russell 1000.
Yeah, let's go to that.
So just so everyone knows, when you're running these scans, you can run them using NASDAQ stocks, NYSE stocks, Russell 1000 stocks, Russell 2000 stocks. So, when I usually run them, I run them 2 or 3 times with each of those indexes.
Against different lists. There's a
Right.
good way of knowing kind of it's one way of knowing where money is kind of rotating, right? Like we ran into this a couple weeks back when the Russell started to like really perk up. All of the scans kind of dried up on the NYSE side, but then on the Russell side, they were all jamming. It was like, it was clear as day.
And that's where the Russell, it was like all banks and REITs and home
Yep.
builders. I mean, all the interest sensitive names, and of course the small caps were absolutely ripping while tech was getting its face ripped off. Another one that looks really good that actually was on my watch list this morning. I didn't do it, but it will be on the watch list again tomorrow, is KVUE. So this is a spinoff from, I think it was Johnson & Johnson. So monster gap up on earnings a couple weeks ago, and now it's back above those May highs. Kind of been retesting that for the last 2 days. So I would consider a position tomorrow if it opens up above 2094 with a stop loss maybe around 2070, 2075, something like that.
Yeah, and this one's a relatively new name, huh?
It is. Yeah, I think it was a spinoff from Johnson & Johnson.
Ah, check
So
this out too, Jonah. Your anchored VWAP from May
Oh, wow.
1st, 2023, the day it IPO'd.
I didn't even notice that.
You are right there on it.
Okay, so knowing that, then, oh, perfect. So forget the 2094 level. I would buy this one if it opens up above the VWAP tomorrow. And then just use that as my, my line in the sand, my risk management level. So I mean, for me, like that's swing trading, my hedges and my investment portfolio. It's just finding a line in the sand that where you can manage risk against it. So for instance, in my investment portfolio, I use a lot of hedges. So when the markets are pulling back, I'm usually shorting ARKK, TNA, which is the leverage IWM, and I'm shorting TQQQ, which is the leverage QQQ. Because I run a lot, I'm usually like 150% long, but then I usually have enough hedges on to bring my net exposure down to about 75, 80% overnight. And then during the day, if the markets are acting well, I'll take the hedges off to maximize the upside without the drag. And I'm typically using certain moving averages or support resistance levels to tell me when to take the hedges off, when to put the hedges back on, when to add more hedges. And it's usually the 20-minute, the 50-minute, or it's a recent high or low of the day. So ARKK on the minute chart, but this is my ARKK on the minute chart. So as you can see, ARKK, which I had a big hedge on, hedge in or short on, whatever you want to call it, coming into today, I would have covered that hedge if ARKK had pushed above either the 200-minute SMA or the 200-minute EMA. It really didn't do either one today, so I kept that hedge pretty much the entire day. TNA,
it's essentially your proxy.
Yeah, big short in TNA coming into today. Same thing here, pretty much stayed below the 200-day the entire day. It did push through. I covered half here, and then once it was unable to stay above the 200, got back into my hedge, and then pretty much didn't screw around with it the rest of the day. And TQQ, sort of the same thing, a little bit more choppy, covered here, got back in here. So, I mean, I do trade my hedges actively during the day, but there's also times, so TNA, I might also, if it's below the 200, but we're bouncing off of a recent low, I might try to cover here. So 1145, it bounced off 3570. We bounced here. Once we got back above 3570, I would cover half of my hedge here with a new stop order just below that. So if it didn't stick, I'm out. In this case, we did bounce. So I had half of my hedge here, pushed back through the 200, covered the other half. And then once we got back below the 200, I was back into my full hedge. So one of these days, I'll do a webinar just on my hedging. It changes every day based on what the markets are doing, based on what these specific ETFs are doing, whether I'm using lows, highs, moving averages. Like it really is it's just always changing. So it's hard for me to put anything in writing or put anything on video because whatever I tell you or whatever I say may not be relevant the next day.
Yeah, maybe it's just about kind of defining bigger general market conditions. And when the markets are generally like this, I do this. When the markets are generally like that, I do that.
Yeah, that's true.
Well, Jonah, man, this has been awesome getting to like dig into these scans with you and kind of understand your mental process about how these names, about how you're thinking about these names for anybody who is interested. Oh, somebody asked about on.
I was gonna say we could. I mean, I have 10 minutes. We can go through some questions if you want.
Okay, cool. Yeah, let's see here. Oh, somebody asked about the on report tomorrow.
We'll find out. I don't know. I don't guess on earnings. I have a position in on running. They report earnings tomorrow morning. I hope earnings are good. I don't make bets. Like I'm not betting on any of my companies for one individual earnings report. So we'll find out at 6 o'clock tomorrow morning.
There you go. ClearPoint, CLPT, any opinion? Viewer Andy Sir.
I used to own it. So ClearPoint, I'll just bring it up on the chart. Monster move last week on earnings. I have not owned this stock in a couple of years. It's back on my radar. It's a med tech. I know it relatively well, although I haven't really followed it closely for a couple of years. Growth was just sort of disappointing, but now maybe they're at that inflection point where some of their partners so ClearPoint is a med tech, hardware and software. So they have a piece of hardware. I forget what it's called. I want to say it's the ClearPoint navigation system, or maybe that's the software that helps deliver drugs and therapeutics to very, very specific spots in the brain. So there's a lot of companies out there that are developing all sorts of drugs. I'm guessing Alzheimer's is one of them that need to be delivered to specific points in the brain. ClearPoint is a company that can help the specialists do that. And I'm guessing that something moved the stock. Obviously, it was earnings, but I don't know if it was like the quarter they just reported. Maybe it was guidance. It was commentary about one of their drug partners. Because the problem is that even though ClearPoint has like 40 different drug partners, I'm not sure if any of them, maybe one of them or a couple of them, have a drug that's FDA approved. However, all those other partners have drugs that are in trials or development. And if they do get FDA approved and turn into big drugs, it's a huge win for ClearPoint because most of those drugs will be delivered using their system. So maybe ClearPoint's finally hit that inflection point. So that's why it's on my radar. And once again, medtech, healthcare, if we have a recession, this company will not be impacted.
Got it. Another question regarding...
And it's a small cap that loses money. So if the 10-year continues to come down, that'll probably help them too.
Yeah. ACV Auctions. I'm not sure what the ticker, maybe the ticker's ACV.
ACVA. Yeah.
ACVA.
I mean, I don't know anything about the company, the fundamentals, the valuation. I've tried trading it before without much success. I mean, I certainly wouldn't touch it here. Maybe if it takes out these highs here, it could get interesting, but this is pretty choppy. So this is probably not a name that I would touch anytime soon. Maybe above 1952, something like that. 1957, somewhere in there. Not on my radar yet. I don't think it's popping up in any scans, although it might have, and I just skipped over it when I saw the chart. I mean, maybe this is the kind of name where I would consider starting a half position above 1865 and then a full position above 1957.
Yeah, blue skies. This is an interesting question. Do you ever try bottom fishing? We've talked a lot about breakouts and retests.
Yep. So that was kind of my point with Celsius is bottom fishing, but there has to be a level of support. There has to be some technical support where I can manage my risk against it. So one name that I've been watching is Lululemon. So the stock's been absolutely smoked. I tried buying it so it dropped on earnings or dropped on something a couple of weeks ago. I don't know if that was earnings or not. And once it got back above the May 2022 highs of the May 2022 lows of 251.85, I tried starting a position, but then I got stopped out on August 1st. So I would consider getting back into Lulu, but it's got to get back above 251.85. Dexcom is another one that I've been watching. So this one also got smoked on earnings, like real bad. I think it was down 30%.
Jeez.
But it did reclaim these levels from the May 2022 lows. So if it wants to come back here and retest that level, I would consider a position there with a very tight stop loss just below.
Yeah.
So those are two. I'm trying to think, there was a few more. So even Elf reported earnings last week. Stock got hammered on it, was down another 11 or 12% today. So I'm watching this level right here around 140. This is the September 2023 highs. So if Elf bounces off 140, I would consider a position there. Otherwise, I don't really see any great support. Maybe here, but I wouldn't want to own it below 132. So 140 is what I'm watching on Elf right now.
You crypto guy at all?
No.
Don't touch it.
Not crypto by itself. I have swing trades in Coinbase right now. So I got into coin in both my portfolios last week. So Massacre on last Monday. And then once it reclaimed the 200-day, I was in it. So I'll be in coin as long as it's above the 200. I'll be out of coin if it's below the 200. And then you also have that support rate there from the December highs. So I'm in coin right now with my stop loss at 185. So that's the extent of my crypto. It's Coinbase and then Robinhood to a smaller extent. Robinhood for a lot of reasons outside of crypto. So like this is another one, Baxter. So if Baxter can push through the 200-day and the VWAP from that high, like I'm definitely taking that one. Plus it's healthcare. So checks all the boxes. Another one, Box. If Box can get through that VWAP, this is one that'll probably be in my watch list for tomorrow.
Dope. Yeah, we could definitely add this to the list of scans for sure.
Here's another one. So there's a lot of these stocks that are trying to push through VWAPs from recent highs, or their highs from last year, or trying to push through the 200-day. And there's probably 15 or 20 stocks that'll be on my watch list tomorrow that are right up against the 200-day. So I love that risk reward right there. So here's one of like Under Armour, which is a name that everyone's forgotten about, and the stock's been decimated the last few years, but big gap up on earnings. So this one pulls back and retests the 200. I would absolutely take a swing on that.
I was gonna mention this. Another one, Planet Fitness. I thought was up your alley.
Yep. PLNT. Yeah, so I mean this looks pretty good. I mean, similar to Lifetime Fitness. Yeah, I mean, I think I like Lifetime setup a little bit more, but yeah, I'll definitely keep an eye on this one too. I also like Lifetime gyms better than Planet Fitness gyms.
And you're an expert in this world. I trust you.
Not an expert. I got a lot of injuries from being an expert, so.
Very much appreciate your time and your knowledge. For anybody who is watching, you are not yet a TrendSpider trader. Jonah's deal is literally the best deal that you can get on TrendSpider in the world. Up to 65% off. And you get access to all those scans that we went over throughout the webinar today.
How do they access the scans? Because I don't think they're preloaded automatic.
That's correct. As soon as you sign up, hit us up. If you hover over Jonah in the very bottom right-hand corner where it says contact us, just right above you, at the bottom of your watch list there, hit us up in chat. Our customer support guys will send you over the links.
If someone's already a member of TrendSpider, can they also get access?
They can. Yeah, they can hit up customer support and customer support will hook them up.
And it's the 52-week breakout retest, pre-breakout. It's the power gaps.
Yeah, if anybody's interested, by all means, please feel free to sign up, get a killer deal on TrendSpider, get access to all Jonah scans.
Subscribe to Jonah Lupton YouTube channel for more videos and visit www.luptoncapital.com to check Jonah's various investing and trading services.